The stock market has been on a roll recently. We have Joe Tegay on hand for some Trader Talk. Joe.
Thank you, Angie. This is a Trader Rundown. Now we're watching the markets having a tremendous run the past week. Of course, yesterday we got great news out of Google. Great news in the morning out of Gilead, a good trial for one of their COVID treatments. So certainly the market's looking positively about that. So those were two good news events yesterday. A bad news event yesterday was a negative 4.8% GDP for the first quarter, putting us on track for a recession. The second quarter is expected to be worse than the first quarter. And remember, we only were shut down for March in the first quarter. We'll see how long we're shut down in the second quarter. Hopefully we'll get things turned on sooner rather than later and safely when they do get turned on. So watching all that, hopefully, again, the economy does open up. However, I think we need to remember there are certain parts of the economy, even if we open up, that are still going to be struggling because of the restrictions, and it's not safe to do so. Of course, restaurants, bars, movie theaters, etc. Maybe if they opened up, even if they do open up, I should say, will be operating at a lower capacity. So how long can they stay afloat like that? So that's what we'll be watching.
Joe, what are some of the catalysts in the market?
One of the best things yesterday that happened was oil rebounded, maybe a sign that there's some stability and people are have a little confidence that growth will come back eventually. Of course, we know it will. It's just a matter of how long. And another sign of confidence is if you're looking at the VIX curve, yes, it's still above 30, but finally we have the cash below the front month future, which is a normal situation. We have the second month future above the front month future. That's called contango. That's the way it usually is. That's the sign for confidence for the market. For me, VIX above 30 is still a little troubling, but we're going to move forward like that anyways.
What else are you seeing down the road? The market is always forward thinking.
The rest of the year, of course, we still have the election coming up. That's going to be a volatile event. And we're going to be worrying about a second dip in two areas, second dip in the coronavirus. Hopefully that's not too bad. And a second dip in the economic crisis. For me, flashing back to 2008, 2009, we had a sovereign debt crisis in Europe when the tax revenue wasn't there. People couldn't pay their debt. Is there going to be something like that domestically? Thinking about Illinois, Connecticut, states that have debt that were in trouble before this crisis. They're losing a lot of tax revenue throughout this crisis. Are they going to be able to refinance going forward? Politically, that might be really hard in an election year. So we're going to be. I'm concerned about a second crisis with debt. For Equity Armor Investments, I'm Joe Tegay.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.